Good afternoon, everybody. Welcome to the Trading Week Wrap-Up. My name is Merlin Rothfeld. Hope you had a fantastic day out there. Big shout-out to Big Eb for the 10-year-old bourbon you got me. Delicious. I'm going to finish that bottle quick here, my friend. It's good stuff. Helps ease the pain. Well, actually, no pain on a Friday. This is actually a great day for me. We'll talk about the trades here in just a little bit, but I hope you all had a good trading week. It was interesting because some of the volatility just seemed to be like, meh, not that exciting. But at the end of the week, we did have some decent numbers. So there is my Trading Week Wrap-Up logo. I'm going to just start diving right into the stuff here and just get rolling with the topics. Might be a little bit of a short show today, but we'll see what we can get. Before we dive into the stuff that's happened this week, which of course is, I guess, leaves you scratching your head when you look at the PPI, the CPI, retail sales numbers, and just guessing where we're going to go with interest rates going forward. I did see today President Putin and Trump in Alaska talking obviously about Ukraine. And this could be, this is one of those pieces where I was really like, do I want to really take big positions home over the weekend? Right? It makes me a little bit nervous when these two are hopefully very amicable. Hopefully things go calm up in Alaska and if we get some resolution in Ukraine, that would be great. Maybe some economic news. But certainly I would not want to be going in with a big position on oil, either long or short. Andy says, what whiskey was it? Wait, I couldn't remember the name. Richardson's? No, not Richardson's. You got to type it in there, Big Eb. I can't remember what off the top of my head. I just refilled it. I just filled it up. So, it's a good one. All I know is it's a good 10-year small batch barrel. Love it. Okay, so obviously this weekend's going to be a wild one with a lot of potential fireworks because of what goes on up in Alaska. So I'm a little wary because I do have some bigger positions going into the weekend. I'll tell you about those positions here in just a second, but I think this is going to be an interesting few days. I, for one, will be watching the news to see what comes out of this. Kind of a little show of force there as Trump flew over, B-52 bombers and a bunch of, F-16s or something over the top right as they arrived. And I saw Vladimir Putin look up like, what in the heck is going on there? Okay. Yeah, thanks, Lisa. The United Health, you talk about what a way to make your Friday, right? I took a leap of faith, and not only did I get a great price for my United Health on Thursday, obviously a monster gap up today, and I did sell some covered calls against it today, which was fantastic. And the premium on a day like today when everyone's trying to buy UNH, the premiums were juicy. All right, before I dive into that, let's talk about B-52 is like one of our, no, was it a B-52 or a stealth? I'm sorry, I think it was a stealth bomber. It was a bomber. That's it. There's the McKenna small batch bonded, delicious. Honestly, I have to finish the whole bottle tonight, Big Eb. I won't go that extreme. All right, I wanted to revisit this one just because Naum, if you're here today, he says I'm going to invest heavily in ALTS. What's your opinion of that stock? And I said, buddy, you're playing with fire with that thing, right? And I was watching it today because, of course, you brought it to my attention, and we had a 17% down day on ALTS today. Now, I'm hoping that Naum didn't buy this, but what's interesting is if you are a fan of alts and you believe their model change from a biotech company to a tech firm, it's got a nice uptrend, as Margaret pointed out yesterday, and this one doesn't look so bad. Now, obviously, 17% cheaper looks a lot more attractive than it did yesterday. I don't think you'll see it down around that 380 mark, which is that leg up we saw from April 16th, but this is, you got to be really careful with these companies, especially when they change names. For those who are as old as I am and were very active in the dot-com era, you saw companies switching all the time. They'd be like an auto parts store. Next thing you know, they're a web developer. You go, what? That's a weird change. Going from a biotech company to a blockchain company, that's a completely different industry, right? You got to imagine that a lot of those employees don't know the first thing about blockchain with ALTS. So careful with that one. And then I had two questions that came in on Ethereum treasuries. They're both basically the same, like how do they function, how do they operate, why is it important? And I was sent a video today by, let me get you some props out there. This is from Oscar Fernandez. He sent this video that you can find on YouTube, which is right here. But I wanted to play a little part for you. And I hope that this works. It'll actually work right now. But for those of you listening to the recording, it may get cut because I don't know if I'm allowed to play other people's content in my channel. A lot of times you get flagged for that stuff and it could be problematic. So it'll probably get taken down. But you guys that are live, you'll get to see it. here's the deal. We talked about the difference between a Bitcoin treasury like MicroStrategy and the difference between a Ethereum treasury like BMNR, Bitmine. And the big difference is with a Bitcoin treasury, there's no way to earn yield on your Bitcoin organically, meaning you have to do something special like lend it out to earn yield. And Michael Saylor is just keeping his Bitcoin, drives up in price, buys more, borrows money, buys more, and he keeps doing that till it goes up. With an Ethereum treasury, it's got very unique properties because when Michael Saylor keeps his Bitcoin, he's keeping it on an exchange, so it's actually adding more liquidity to the marketplace. It's part of the liquid transactional supply. With Ethereum, what Tom Lee's going to do is he's going to take Bitmine's Ethereum and he's going to stake it, which now takes it out of circulation and locks it into the protocol, as I mentioned yesterday. Right now, that's the tune of about $3 billion worth of Ethereum. Now, he's mentioned that his goal is to get 5% of the circulating supply, which is roughly, 5% would be roughly 6 million Ethereum. So you take 6 million Ethereum out of circulation, lock it in the protocol, and you're now earning 3% yield. This has a lot bigger impact on the price of Ethereum going forward. So I think it's really important to understand that the simple difference between something like MicroStrategy and Bitmine and how they function. Now, as I mentioned before, I'm not a fan of Bitmine because I don't like how they're flip-flopping, BMNR. I don't like how you go from one business to the other. However, at the very beginning, I think Judy was in here telling me that she liked it, and I said I wouldn't touch it. I'm changing my opinion. I definitely am changing my opinion. I want to do a little bit more research, but from the interview I just saw with Tom Lee and other things I'm hearing about Bitmine, this could be a pretty big play. And the main reason is they're buying ETH. They are staking it, which they have not done yet, right? They still have not staked their ETH yet. They're trying to make sure that it's totally compliant with all government rules so that they don't get into any trouble here. And they're going to have to find out the way that they want to stake it and how they're going to do that. Once they do that, you should see a surge in the price of Ethereum because essentially billions of dollars are going to be removed from supply, and that makes Ethereum even more valuable. All right. Putin didn't answer. Of course, he's not going to answer that one. He doesn't need to answer that. He certainly doesn't need to answer that question. When's the ceasefire? Well, he might like to say, but he's not going to. So these Bitcoin treasuries and Ethereum treasuries, I think, are interesting plays. I am still long MicroStrategy. I have not done anything with Bitmine yet. I want to do some research on it this weekend. But let me play this part here because one of the things that I've been a real stickler on, and it's a question that I have not had any clarity nor resolution on, and that is this. When Michael Saylor goes and buys $5 billion worth of Bitcoin in a 3-day window of time and the price doesn't move, I call hogwash. I call shenanigans. I call BS. Because there's no way you're going to buy that much of anything and not move the price significantly. So listen to this, and again, I have been of the opinion that this is ledger entries, that companies are saying, okay, we'll just move it around on our balance sheets and do it that way. That's not a good way to do it, right? It's not a legitimate way. These guys should go to the open market. So they asked Tom Lee the same thing on the Bankless channel. And this was pretty cool. Check this out. See if I can make it full screen for you. And listen, hopefully you guys can hear this. I'll turn it up on my end so you guys can hear it. Hold on. Ready?
One thing I can't figure out, Tom, and I think some ETH bulls are with me on this, is how in the world ETH is still trading under 4K? When you just talked about in a month's time, you now have 3 billion in ETH in your in the Bitmine treasury. So 3 billion in ETH purchases. How does that not move ETH price be like 4K and above? Like, how are you still getting a bid at 3,500 ETH? Where's all this ETH coming from, and how is it not moving our price here?
Well, we've learned a lot. I don't really want to say too much because, as you can imagine, we've probably been one of the largest buyers of ETH, and we've learned a lot.
I'm going to stop it right there just to save you the torture. He completely avoided the question. He doesn't give anywhere near an answer. He tries to shift to something else, which really makes me concerned because, again, if you say you've got 3 billion worth of ETH, you've got to buy it somewhere, right? Is he a politician? He's a fund manager, so that's the next step down from a politician, Steven. Absolutely. And this is a question, Margaret knows this really well. I've been going out on, well, I stopped doing it, but I went out on social media and I sent requests to anybody who is in the know in crypto and said, hey, can anybody tell me where you're going? How do you buy that much of something and not move the price? And nobody can tell me, which is why I've had to come up with my own hypothesis, which is fractional reserve lending. Now, here's the interesting part. If Tom Lee and Bitmine are keeping their Ethereum on an exchange and they say that they are quote unquote staking it, that doesn't actually mean it's locking it into the network. So when you go to somebody, there's different companies out there that they allow you to stake. And unless you are actually doing the staking yourself, you don't really know what is happening behind the scenes. For example, if I log into Kraken, so Kraken has staking for different US states. If I log into Kraken and I say, stake my ETH, and Kraken's going to, yeah, you got 3% coming your way. What are they doing with that ETH? Is Kraken staking it internally on their own servers? Are they going out to another network? Or are they just paying me 3% on that and doing something else with that Ethereum? We don't know. And this is one of the challenges I have. Like, I would actually love to start my own Ethereum treasury. If you guys know people who can get me millions and millions, hundreds of millions of dollars, let me know. No, Margaret, 3% per year. So it's not so much about that 3% per year that matters. That's not that important. What's important that if you are truly staking that crypto, it's removed from supply. So the 3% becomes irrelevant. That's just an extra bonus income stream. The most important part is that Ethereum is no longer part of the circulating supply. It's literally taken out of it. That's why I'm so excited about this. Because remember, Bitcoin, there is no staking. There is no locking up of it. And as A-Rod 2.0 says, lending, that is a possibility here, right? Let's say that he buys his $3 billion worth of Ethereum on Kraken. Kraken could simply move around ledger entries and say, yep, Tom Lee, you've got $3 billion, and price doesn't move. Because for a treasury, remember, the whole point of a treasury is I'm not taking it out. I'm not removing it. So in the minds of whatever exchange, let's call it Kraken or Coinbase, if Tom Lee or Michael Saylor says, I want to buy $5 billion worth of ETH or Bitcoin, they know it's going to stay on that exchange. So they'll be like, okay, we've bought it for you at this price. It actually becomes a trading arbitrage component as well. Because if I'm Coinbase and I know that, let's say, Tom Lee has now bought $3 billion worth of Ethereum, and all I've done is put a ledger entry, and I say, Tom Lee and Bitmine has bought $3 billion worth of Ethereum, and the average price is $3,500. In the open market, Tom Lee and Bitmine have bought nothing. They just have a ledger entry at Coinbase. Now, if I'm Coinbase, I can do what I need to do to push the price of Ethereum down. And if I'm on the books, if Tom Lee is on the books having bought at $3,500, if I can actually go to the open market and buy that at anything less than $3,500, that's profit for me. It's free profit. Like one of the fund managers I talked to in New York many, many years ago, he worked for Goldman Sachs, and we were talking about how, order flow works and stuff like that. And he goes, we have big clients that come to us and say, hey, I want to buy 100,000 shares. Let me get rid of this video. Hold on one second. They'll go out there and say, hey, I want to buy 100,000 shares of Microsoft at $525, right? And so what happens is this guy for Goldman Sachs, he said, okay, I've got an order to buy at 525. I'll put a line on here just so you guys can see the 525 mark. Here goes 525. And right now the price is 520. So if that broker at Goldman Sachs can buy all of it, that 100,000 shares at 520, he actually makes the firm $5 per share. Even better, Goldman Sachs could issue a downgrade on Microsoft, push that price down to 500. He buys all that 100,000 shares at $500 and makes $25 per share. So you guys can see that a lot of times clients will come to these firms and say, I want to buy X amount at X price. And it's up to the market maker to go, yeah, okay. And they can manipulate prices if they want, buy the actual real value at a lower price, and that's profit for the firms. Very common on Wall Street, still unknown and somewhat uncertain, in my opinion, as to how this works with cryptocurrency and digital assets. I think it's all going to start to, at some point, the bathwater is going to go out, or whatever they say, throw the baby out with the bathwater, where that stupid phrase is. at some point, you're going to start to see liquidity issues and behind the scenes of what's really going on in some of these trading firms. And I think that's going to scare a lot of people. I think that's going to be a pretty weird piece, because most people are saying, Les says, did you ask ChatGPT or Grok how it didn't move the market? Yeah. And it always says the same thing. Oh, they're using an over-the-counter dealer market. There's not that much on a dealer market. They make it sound like this is a store that has infinite Bitcoin that Michael Saylor can go to that window at any time and buy it. If that is not the case. Most people that hold Bitcoin are holding it and not selling, right? The only way you could buy my Bitcoin from me right now is if you came to me and said, I'll buy it for $250,000. I'll sell you all my Bitcoin right now for $250,000. Right now. If anybody would like it, I'm more than happy to sell it to you for $250,000 per Bitcoin, not $250. So I just don't believe that liquidity is there. I don't believe these open market activities. I agree with you, Oliver, and that's why I'm kind of like, I keep pounding this drum, and I hope at some point I'm vindicated with somebody exposing this. I actually wrote to CoffeeZilla and said, hey, check this out, because this doesn't make sense. These numbers just don't match up. They don't add up, but I got nothing back there. There has to be a private deal between Coinbase and Tomley, or whichever exchange he's working with, right? Absolutely. I'm pretty sure there's some special deal. And it may be, Margaret, it may be, and again, I don't know the facts here, so please don't say Merlin starting all these crazy rumors, but let's assume it's Coinbase, right? Just like Michael Saylor is probably under some contractual obligation that he cannot take it from the exchange, I'll bet you Tom Lee is under a similar contractual obligation where he says, okay, I have $3 billion worth of ETH sitting at Coinbase. Coinbase is going to stake it for him. Now, again, is Coinbase actually going to stake it and lock it in the protocol? Or are they just going to pay him 3% and say that they staked it? My guess is they're just going to pay him 3% and say that it's staked. And it's not actually staked. This is where it goes back to, like, if I had enough money and connections, I would start an Ethereum treasury. And in that treasury, I would show the address of the ETH that is locked and staked. So I can prove to everybody, I'm actually taking out a supply. And once people understand the difference between something like BMNR, which we don't know anything about how it's going to stake, and a treasury that actually shows you the address and stakes it in front of you, that's a huge difference in investment for me. I'm obviously going to go with the one that's actually staking on the network because I know they're removing it from supply. Bitmine and MicroStrategy may actually be creating a problem for the markets, a very large problem for the markets. Someone got paid and it's not telling it. Hey, you know what, Oliver? If this is the case, there's a lot of people that know this that work at these firms. But they're probably under some confidentiality agreement to not disclose this at all on how they're doing fractional reserve lending and ledger entries and borrowing and things like that. That is kind of scary. George says, do you think the early idealistic developers of Bitcoin are comfortable with institutional adoption? As Jeff's comments, it's a good question, George. I think I could make arguments for both sides, right? I could say that the original creators, we'll call it Satoshi Nakamoto, but maybe it was a group of people that all worked on Bitcoin. I could contend that they're not happy with this because this was meant to be a people's asset. So yeah, they're probably against institutional government adoption. Kind of flies in the face of what Bitcoin was created for. On the other side, I think most people would be like, most of the developers would be going, this is a great thing. Because as soon as we see these Bitcoin treasuries, we see companies adding to their balance sheet. We see governments saying we're going to have a strategic Bitcoin reserve. We see countries like El Salvador say this is currency in El Salvador. At some point, we're going to have much more adoption. I think that is really more important, right? The original intent of Bitcoin was to be a peer-to-peer payment network. But what if we could get it to be the peer-to-peer payment network for the entire world, right? Now, that's obviously a very lofty, grandiose idea, and it would seem impossible. But given the rate of adoption and the way we see things going now, the rules are being put in place. Bitcoin's already grandfathered in and probably not going to have any SEC oversight on it because it's a commodity. The possibility of Bitcoin being a global currency is increasing every day. And when that happens, I think the founders, the people that created the concept of Bitcoin, would be very proud because it's now something that everybody can use without government intervention. Now, could the government's price manipulate Bitcoin? Yeah, absolutely, right? They could control so much, they could certainly manipulate price, but they can't make any more. They can't print it. Now, the big issue I have, and you guys know I've been very vocal about this, I believe that things like Coinbase and Kraken and Gemini and KuCoin, I believe that they're doing fractional reserve lending of Bitcoin, which now theoretically could inflate the supply, which is why I always tell people, take your Bitcoin off of the exchange. Get it out of there. Yeah. Because I talked about that one the other day. They also denied revaluing U.S. gold. That's probably the funniest thing from this entire year. My biggest laughing moment is the Fort Knox audit. That's got to be one of the funniest ones. So let me go to this question from John B. I know you're not watching, John, but you said you watched the recordings. He said, no, you don't usually respond to questions outside of your show, but I'll ask anyway. Looks like you're a huge proponent of Ethereum. Seems that you're also not a big fan of BMNR. So wondering what vehicles would you seriously consider for buying Ethereum? Look, I'm going to dig. Look, which vehicles would I consider? Buy Ethereum. Just buy Ethereum. Go buy some ETH. Send it to your. I have my ETH on cold storage. I got a little cold storage device. So buy it outright. As Big Eb just typed in the chat, buy it outright. Just go buy some Ethereum, move it on to cold storage, and keep some for yourself. If you don't want to take the headache of buying a Ledger, a Trezor, or some other Tangent wallet, you could use the ETFs. Now, the only one that I would personally buy is ETH. So let's bring it up here for you guys. There's Grayscale's got a whole bunch of them, but this is the Ethereum Trust, which is put out by BlackRock. It's got a 25 basis point transaction fee, so it does have a 0.25% transaction fee, which is not much in the grand scheme of things. If you do Grayscale's Ethereum ETF, it's 2.5%. So don't do anything with Grayscale, guys. Just run away from Grayscale. If you're holding it, sell your Grayscale ETH and buy ETH. Don't buy GBTC, buy IBIT, right? So this definitely tracks. If you want to see the tracking, I can add it on here. Let's go ETHUSD. I mean, it's spot on, lockstep. So that's what I would say, John, is I would go with IBIT, or sorry, not IBIT, ETH as a proxy for it. Now, the sad part with this is you do not own the Ethereum, right? The ETF owns the Ethereum, but the trust owns the Ethereum. So I think having physical ownership is the better way to go with this, but again, up to you. With regards to BMNR, I'm just skeptical because it's so new. There's only a couple other out there that are doing this. This is the biggest one that are doing a treasury. You know, again, this was a company that was doing Bitcoin mining stuff, and you can see like it just changed all of a sudden. There was really nothing going on with this thing, and all of a sudden it just had a huge surge, a huge spike in valuation. And as you'll notice, it is not following Ethereum. I mean, yeah, okay, the last couple weeks it has, and we'll see if that starts to become a little bit more correlated with BitMine. We'll see. So I don't own any BMNR. I may in the future add some to it. Right now, I'm not buying Ethereum ETFs. You guys know I own Ethereum. I've got a good chunk of ETH, and I will continue to have that. As mentioned yesterday, it's Tom Lee appearing in CNBC every day. Yep, exactly. He is definitely, he's a gold pimp and he's an Ethereum pimp, right? He's always talking about those two. I tend to agree with him. There's an attitude of flipping, right? So flipping is a term used when one cryptocurrency passes another. So Bitcoin has just flipped Google as, I think, the 5th largest asset in the world. I think I'm right on that one. I have to look up the list. But the talk track from Tom Lee is that Ethereum, ETH, is going to flip Bitcoin in value. Now, that's a long way from happening, right? So here's Ethereum. I'll bring up a different page here. Give me just a second to bring this up for you guys. We'll go to CoinMarketCap, and I'll show you the two. I mean, it's not even close at this point. Bitcoin right now has a market cap of 2.3 trillion, and Ethereum has a market cap of 500 billion. So you got to, you're looking at a 5x from current valuation to have Ethereum flip Bitcoin. But when we look at there you go. Yep, Big Eb's on it. ETH. Alcazar says, we used to mine ETH with GPUs. Yeah. Yep. And then it switched over from proof of work to proof of stake. And you're going, wait a minute. What am I supposed to do with my GPUs? So this could take a long time. But the big thing here that for those who might be new to crypto is when you look at this list of cryptocurrencies, and it's got, Bitcoin, Ethereum, Ripple, Tether, BNB, Solana. These are all so different, completely different technologies. Bitcoin, primarily peer-to-peer payment. It's really designed to be a store of value. It's slow on purpose. It's designed to just transact. Ethereum is like an electrical system that you can plug all kinds of crazy appliances into it. You could do lending protocols, identity tokens, you can do metaverse games, you can do exchanges, and it's so crazy what you can build on ETH, which gives it a tremendous amount of utility value. And I think that's the piece that could theoretically, at some point down the road, and I actually am in this camp, I do believe that Ethereum at some point will have a bigger market cap than Bitcoin. It's the largest decentralized computer in the world that anyone can plug into. All you have to do is have Ethereum. You can plug into it and do whatever you want. So definitely something to think about down the road, that if more people are building products and services, particularly financial products and services on top of Ethereum, that creates more demand, and therefore Ethereum could surge even higher. So especially, like I mentioned, we have Coinbase, you've got Robinhood, you've got JP Morgan, all using some sort of layer 2 solution to plug into Ethereum. That adds a lot of dependency on that Ethereum network. All right. Lisa says, I recently heard a ETHU 2x ETH. Yeah, there are leveraged ones. ETHU is 2x. I think there's another one out there. Yeah. But you got to be careful if you're doing leveraged ETFs. You guys know I am a big fan of not using leveraged ETFs. But look at ETHU. If you look from the lows that we had here in April. All right, remember, we talked about Ethereum having like a 260% rally from bottom to top. This thing's up 740%. 740%. Holy cow. Yep, and as Alcazar says, and I've mentioned that many, many times, the longer you hold these leveraged ETFs, the more value you end up losing. Now, of course, when something's on a monumental rally like Ethereum has been on, they're great. But don't if you're losing money on a leveraged ETF, don't hold it. Get out. Right? Get out. Lee says, I bought ETH on Coinbase. Nice. Yeah. And, Lisa, it depends on how much you have. Like, if it's a few $100s or a couple thousand, you're probably okay just to leave it there. But if you get a bigger position, and you're in a couple $100,000 range, I would recommend getting it off of the exchange. You are technically helping the price of Bitcoin or of Ethereum by moving it off of the exchange. More risk the longer you hold it. Yes, Rob, there's absolutely. There is a big risk the longer you hold something. Yep. And it's usually not a 2-to-1. Here, I can show you here. Let me go to a website called stockcharts.com. It's a real quick comparison you can do here. It's called a perf chart. So I'll just show you. What? Where's the perf chart? Oh, there it goes. Interactive perf chart. Sorry, I'm losing my day. So if we go here and let's just put SPY. That's the S&P 500. Here's SH. SDSU. I forget what the long ones are. I'll just do those three. So that's a single is SPY. SH is single short. SDSU is double short. So let's look at the chart here. Oh, actually, no. It's only showed up 2 of these. I forget them all. But, this is not going to work. It didn't work. So if you look at SPY right now in the period of time displayed, no, SHY is short-term bonds. SPXL, I'll add that one in. If you guys can look them up for the I thought it was SDS. Sorry, that's the ultra short S&P. Yeah, that's the double short. Okay, so we'll just keep those. So here you go. So here's the S&P. So for the time frame I have here, I'll show you just from the beginning of the year. There's from the beginning of the year. The S&P right now up 8.84%. So in theory, SH, which is the single short, should be down 8.84. It's down 6.12. Then you have the leverage is down 17%. Yes, it tracks inverse. And the more leverage, the more time decay you leave, the more time is on it, the bigger those losses become. It's terrible. So if you're holding like Boyle, right? So let's say you wanted to go long natural gas. So you decide to buy Boyle. And natural gas goes sideways and doesn't do anything for like a year. You're losing huge money. Because UNG probably went down slightly, but Boyle went down a lot because of just the way it's calculated, the rollover, the contango and degradation of contracts because they're futures products. There you go, Boyle and Cold. Yep, those things will screw you. especially if the market doesn't go in your direction. If they move in your direction, who cares about a little bit of decay, right? Yeah, because they're loading up on the leverage ones. Thank you for throwing those in there. Just be careful. If you're day trading, I'm a big fan of them. Love them if you want that intraday volatility. Just make sure there's liquidity. But if you're a long-term holder, man, they could destroy your account big time. They just bleed you dry over time, especially if something's going down. Rob says, time is money lost too. Yeah, right? And what happens, I'm sure everyone's been in that situation where you open up a trade and it doesn't do what you thought it was going to do, and you kind of just sits there and does nothing and maybe tickles lower just a little bit. The longer that goes on and you're in a double, triple leverage long position, the more it's just killing your rates of return. You're underperforming significantly. You should just get out and move on. Yeah, Big Eb said you could swing trade them too. Yeah, if you're going to go a couple days to maybe a couple weeks, but this is not something like, oh, I'm really bullish on the S&P. I'm going to buy a double leverage long S&P for the next 5 years. I would not do that. Absolutely not. So what's the best way to short the S&P long term? If you want to short the S&P long term, I would say it would be to, if you want to short the S&P long term, it would be to short. Man, it's funny because I was like, if you hold on to the double leverage longs or the shorts, you'll actually end up losing more and more money. So I don't know. I would probably just stay with SPY. I don't like using leverage like that long term. So I would just I would sell short SPY would be the way I would do it, Stephen. Yep. These leverage ETFs destroy the market. Market is up so much because of leverage retailers, and guess what? Most stock only leverage. So I wouldn't say it's destroying the market, right? And that's just my perception. Again, you can say that, but for me, it's not destroying the market. It's adding an element of volatility to it, right? So the market's always going to morph and adapt and change to whatever comes its way. While we may not like these leverage ETFs, they do add extra volatility to the marketplace, which as an active trader, bring it on. I'm fine with that, right? Give me more volatility from a short-term perspective. I love it. Premiums on options are higher. It's better for me. Like I said, that's why we have HIMS, Hood, and many others so high. Well, HIMS, who knows why the hell that thing's so high, but Robinhood, it makes sense why they're so high. They have made the change and they switched over and we're going all in on digital assets and cryptocurrency. The hottest market segment to come around since AI or .com, right? So Robinhood's going full bore. They're creating their own layer 2 solution that you can create digital assets on, new services, and it plugs into Ethereum. Groundbreaking. Same thing with Coinbase. So yeah, they have a vision for the future that's digital assets, which is something that I've been talking about for years now, that we're going to start to see more digital assets proliferate the market. And to me, that's where this is really going to make a ton of money. And Robinhood right now is positioning themselves to be one of the bigger in the trading space for that. I don't see Charles Schwab, Fidelity, I don't see them making a layer 2 solution that plugs into Ethereum where I can trade all these digital assets on top of it. It's not there. So cheers to Robinhood and Margaret for holding Robinhood, because man, that has been a come from nowhere celebration of innovation and just ass kicking. Right? I'm always glad to admit when I was wrong. I mean, everybody knows back here in 2023, Margaret asked me about it and I said, this thing's dog doo. It's garbage. Look at the chart. It's going nowhere. But we also made the point that once we start to see new highs being made, okay, maybe it's turned the corner. But for right now, nothing. Right? And then all of a sudden back here in 2024, it popped above that 1312 line and just has not looked back since. So bravo. I'm glad you loaded up on that one, Margaret. I hope you have a lot of shares. Alex Zar says, no, we don't have short leverage ETFs as much. Well, yeah, Margaret's a prophet. She's got her talent. She's got her gifts. So Palantir short ETF leverage is 1x and long is 2x. Well, yeah, they're not for everybody. There's not the same singles, doubles. I'm happy that it stopped because about 4 or 5 years ago, there was talk about having 10x leverage ETFs. And I was like, hey, come on, man. People are going to lose their accounts so quickly there. So John B., if you're seriously consider buying Ethereum, buy Ethereum. Buy it outright. If you don't want to do that, then buy ETH-A. ETH-A's got very small fees, and I think that's probably the best way to go with your Ethereum. That's the easiest route. All right, let's do a quick follow-up here for UNH. Holy shnikes. Man, I got so lucky yesterday, and it was funny because intraday I was sitting there and I saw a hammer formation. And I was just watching UNH, and I'm like, you know what? Let me bring it up here. I saw a hammer formation, and I saw it, like, you know what? I'll make a day trade out of it. And so I bought some, and you can see right here, there's right at 11:35, a great hammer formation. So as it came out of the hammer and broke above the high, I bought 600 shares of it, right around 270, 40 something. And then I was just thinking about it. I heard all these rumors about how Warren Buffett bought. He's making the announcement after market. And I'm like, you know what? I've got a stock that's already depressed so much. I don't think this thing's going to fail. It's too big to fail. And lo and behold, I was blessed. I was so fortunate that the news came out the way it did, because man, it had a monster gap today. 11.98%, which may not seem like that much, but that's a $32 gain. I was in 600 shares of that, so you can imagine the gain. And that's just from the close of yesterday. My average price was in the 270 mark. So totally lucky, Alcazir. Absolutely. Now, what I did today, and I'll add it on here, as we were rallying today, I was looking at this peak we had back from July 1st, which is peaks out right around 326. I sold the calls against it expiring next week at 325. So I've got I'm long from 270, but you take in the premium I collected on the premium I collected today, which I'll show you here in just a second, and it makes for a pretty good dollar cost average on this price. So let me show you the current trades. Oops, hold on a second. What just happened over here? Let me show you these. Hold on. And these are, I'm going to switch this up here. Hold on. There we go. All right, so this is the options expired today. So my CoreWeave expired. Those were exercised. Those were given to me. So I'm long CoreWeave from 105, which is not great. CoreWeave, I had 10 of those on CoreWeave, and so I collected $1.90, and I'll show you the end result here. But anything crossed out, those all expired today. So SMCI expired, worthless. I had the 410 calls against my MicroStrategy position, and those all expired, worthless today. So I got to keep all that premium, which is delicious. I sold these two today. So I sold the CoreWeave 110s, and tell you what, the premium on that was amazing. I was going to go the 105s, which is my strike price where I was executed. You can see up here at the top, I received it at 105. And I thought, man, the premium was just so good. It's actually 2.6%, 2.4% rate of return for the week just on the premium I collected, and I would still be getting out $5 higher than what I purchased the shares at. So that's fantastic. Couldn't I sell it before? So what? I was fine to be exercised. Margaret, the volatility on CoreWeave is ridiculous right now. A little bit nervous, but I think long run I'm fine with CoreWeave. They just did a massive deal with some data center. That I think we're fine. Yeah, implied volatility is just off the charts. Most of these are really high volatility. And again, I think I've told you guys before that the portfolio I'm sharing with you is just for the show. I have other portfolios. This is what I'm calling the TraderMerlin portfolio, and we'll track that one at the end of the year and see how it goes. Yeah, I do too, Steven. I hope. Yeah, you got calls next year. You got a bunch of puts. I think you had the 110s and 105s, and that's why I didn't want to go out 2 weeks. I mean, honestly, I made this 190 in 2 days. So it was about 1.7% rate of return for 2 days. That's pretty damn good. I got lucky on that one. Although I'm underwater right now, so I think you'll be okay, Steven. I think you'll be all right. So these two new call positions are covered calls. Obviously, my United Health. I'll show you the positions here. These are the positions with my premiums included. So the premiums I've collected on these, this is my average price. So the UNH, my average price is 266. CoreWeave, my average price is 100.45. And I've got 1,000 shares of that. I was going to go more, but I decided, what? I'm a little nervous on the volatility there with CoreWeave. So I decided to stay up. Yep, I knew about the lockup. Yeah, absolutely. So you had your basic IPO lockup on CoreWeave, and that's part of the reason why. So you had bad earnings, but you also had the lockup period ending, and I think that's what caused a lot of this downside sell-off. So that's fine. Yeah, obviously, Alcazar, I knew that one. Definitely knew that. Not so concerned with it. We'll see what happens. I mean, obviously, that's probably the riskiest position I have right now is the CoreWeave. I'm not concerned at United Health at all. if United Health runs and stops me out or it gets taken away from me next Friday at 325, I'm fine with that. And I'm not so concerned. If I do get taken away at 325, hey, you know what? I'll be sitting here on that show on Friday going like this to you guys. Cheers, was a great trade. I mean, especially considering that trade is like 1 week. I don't want to boast or gloat on it. That was lucky on my execution, just serendipity that Warren Buffett was buying. But I had that gut feeling because I've been hearing about Buffett buying a lot of UNH. But the other ones, CoreWeave, I think right now is my biggest challenge, just because of, as Alcazar says, you do have the lockup, the IPO lockup is now done and people are selling their shares. But I do think a lot of that was factored in over the past 2 days. I mean, if you look at the 2-day slide in CoreWeave from their earnings, it's pretty intense. We are down from bottom to top 36% in 4 days. That's extreme. And CoreWeave is not like a fake business. Nvidia's invested heavily in them, and they're doing lots of data center stuff. So I'm okay with that. Nah, I'm okay. All right, so I think that covered the adjustments here. We'll see what I decide to pour onto the table next week. Right now, again, I don't want to go too big. I'm still not back to 100%. I go through these waves of uncomfortableness with myself. So until my head is back on 100%. I'm not going to go really big size. This is not too big. This is enough where I feel comfortable without going too big on shares. George says, Scott Besson backpedaled a bit today on the Bitcoin reserve, and it didn't move the market. Bitcoin, any thoughts? So, George, I meant this yesterday. I thought it was really funny that Scott Besson on CNBC said, we're not going to be buying any Bitcoin. We'll keep the Bitcoin we have. Any new confiscated Bitcoin, we'll keep that as well. And then President Trump is also supporting Senator Lummis's bill to buy a million Bitcoin. So I think what happened there is Scott Besson's like, okay, maybe I need to confer with the president here and see what's really going on. So not 100% sure which way they're going to go, but I would be more inclined to follow what the president says versus what Scott Besson says. And, if Trump gets behind Senator Lummis, which I think all of you should be really happy about that if he does, if he gets behind Lummis's bill and says, let's buy a million Bitcoin in the next 5 years, my target for 250 is going to get hit within a month. It's going to happen very, very quickly. So definitely keep your eye on that one. I'm excited for it. I think it's going to happen. Not now, but I do think that in the next few months, I think that you're going to see more pressure for this Bitcoin bill to go through and buy a million Bitcoin over the next 5 years, which would be intense. Oliver, this is McKenna 10-year small batch bonded bourbon from Big Eb. Delicious. Is the government staking Intel a good thing long-term for Intel? It's a great question, and I don't know if I really have a good answer for that one, Stephen. For me personally, as someone who is a believer in free markets, and for the markets to go up long-term, I don't like the government picking winners. Typically, the government does not have a good track record of picking winners. Now, unfortunately, Intel has a lot of fat cats in Washington, D.C. They've got connections, and that caused them during the CHIPS Act to get billions and billions, or as Trump would say, billions and billions of dollars. It's huge. They got so much money. It's crazy. They got billions. I don't think that that's necessarily good, because I feel like when you are given handouts, and you're given stuff for free from an entity, I feel it makes you lazy. And I apologize, that might come across as cold and callous, but I think if you're given something for free, it makes you lazy. You're like, well, why do I have to work? I'm just going to get that. Whether it's a lot of different things. I'm going to mind my words very carefully so I don't offend anybody here, but I'm a believer that you need to work your ass off to get to where you got. And I look at something like Nvidia. I look at something like Tesla. Tesla did get handouts, but if you read the story of how Tesla came to be and Elon Musk, that was a grind. It was hard work. It was kicking butt all the time. And I feel like those companies that take handouts typically don't do the best work because like we got free money coming in. If Intel could take that money and have an Elon Musk attitude towards we need to be the premier chip maker in the world, we need to destroy Nvidia, I think they could do it. You got to bring in the right people. I think you have to have a change of mindset, and you have to have I think you got to go through Intel, and you got to kick out a lot of people that are there that aren't doing their job. They're on old technology. Get rid of them and move forward with new technology, right? What's the future hold, which is where NVIDIA's advantage is. They're looking future. It's not CPUs anymore, it's GPUs. So I think that if Intel could really make some major corporate changes, I think that they could excel and do very, very well. Will they? Right? They're a bloated company. They're so big. They got just problems. I was talking to a friend the other day when I lived in New Zealand, or not New Zealand, I lived in Australia for 8 weeks, and I did 6 weeks on like an outdoor adventure course. It was awesome. We were camping in the stars and kayaking, hiking, rappelling. It was one of the best times of my life. We were on two-man canoes, really, kayaks, going down this river canal by the Blue Mountains in Australia. And a cruise ship came down. And a cruise ship, I mean, you're talking like a 15-story cruise ship, and we're in a canoe underneath this thing. It was like mammoth. And I thought about like how easy is it for us to change direction in that canoe? A couple quick paddles, I can go the other way. That cruise ship would probably take half hour, 45 minutes to turn around in this really small riverbed. And I look at Intel as somewhat similar. Intel is a behemoth of a company that to make fundamental changes is going to take a long time. Whereas Intel, even though it's the most valuable company in the United States, is a much smaller business and can change much quicker on a dime. So, it'd be hard, Stephen, for me to really get back behind Intel fully. I think they definitely could vault themselves back into prominence. Look at Microsoft, right? I think if you guys went back a few years, you'd probably say, well, Microsoft, right? What are they doing? What are they innovating? How is Microsoft a leader? And what do? They bring in new CEOs. They take a step back and look at the big picture and say, okay, it's not on our Windows anymore. It's on other applications. It's crowd storage. It's AI. And then you look at a chart like this and you go, holy cow, is this Microsoft or a .com company? I mean, it's just accelerating like crazy. And I mean, back in 2016, 17, you'd be going, Intel, it's okay. Or sorry, Microsoft, it's okay. Right, really all through 2010, 11, 12, 13, Microsoft didn't do squat, and then they kind of reinvented themselves. And here they are now, one of the most valuable companies in the world. So I think Intel has the same possibility to have a chart that looks like this if they can redo their model. If not, they're going to stay like this. You got an old technology. Yes, everybody knows you. Everybody knows Intel inside, but no one cares. So I don't know, Steve, that's my answer to it. It's tough to say, but I think any company that's stuck in a legacy technology has the opportunity to change immensely. I think that they can change, but you have to do a lot of hard work, right? You got to gut that company. You got to get rid of people that don't belong there anymore. You got to get rid of stuff that doesn't work anymore and make the tough choices to make those changes. And it could cost money, but remember, they just got billions of dollars from the government to build more chip factories. Well, what kind of chip factory are they building? Probably not GPU stuff. Anyway, I read the Elon book, so the autobiography, or I listened to it. Oh, that was great. Oh, it was really fantastic. The yearly fee to use Windows is a big income stream for Microsoft. Right now, remember, it used to be you could buy it and just have it forever. Now it's annual renewal. Bastards, get you every time. Better take quick profits while green out. Don't give it back. Sure. The government just has endless money, so that's a plus. But I see every other aspect of its downside. Well, the government technically, theoretically, has endless money, but what we really want is the government to stop spending. The government needs to stop shelling out money like this. And personally, I think you let capitalism come in and really the good companies will thrive, the bad ones will disappear, and money will roll into the good stuff. Yep. Intel, they need to be very agile. China's entering the chat. Yeah, well, China's been there, right? China's been there. All right, let me. I didn't realize I wasn't. This was supposed to be a short show today, but apparently not. You just keep pulling me back in. Disappointment today, but not that bad. We talked about the retail sales number, right? Here's your retail sales. Oh shoot, I forgot to update my Fed chart table that I was building for you guys. I'll do that this weekend. But for a retail sales perspective, it was a decline. We were expecting it to go from 0.9 to 0.6, came out at 0.5. The good news is we're still up, right? Which shows demand for goods and services. People are spending. That's a great sign. So hopefully we'll get next month we get another positive reading like this, and that would be good for the markets, right? And certainly support a 25 basis point cut. It doesn't need to happen. The retail sales won't be the driving force there for their cut, but knowing that spending is fine and people are doing good, as long as inflation's under control. You saw Goolsby today came out and said, I'm starting to think we might want to hold off on the September meeting. So all of a sudden, he's, let's stay the same, because that PPI number we saw yesterday was pretty brutal. Out of nowhere, way higher than expected. There'll probably be a revision, but again, it's going to come down to that core PCE number that comes out in a couple of weeks. We also have the unemployment claim, so it's going to be an exciting month of September, that's for sure. Okay, there says, I don't feel good about next month. Well, I'm going to just go out on a limb. I'm trying to have a positive attitude. I feel great about next month. You know why? It's going to be volatility. Going to be volatility. And if you're right, and I do believe you are, that PPI will translate into a higher CPI, that means higher inflation, and that means the markets will probably start to take a little bit of a dive. Why? Because people right now are expecting the Fed to cut rates in September. If that inflation and CPI spikes like that, they're not going to cut in September. And that means the markets might take a little bit of a dip, which is great. Wolf has shorting opportunity or buying when we bottom out. There is talk that a lot of people are buying before the tariffs hit, but that was the case before too, right? I did. Service made a jump at the PPI increase. Yeah. All right. And then earnings. What I think Monday. I can't remember off the top of my head, so I guess I need to bring it up for you. I was going to try to wrap this up, but here we go. Earnings for next week. There are a couple big names. Most of it's retailers. You got like Target and Walmart near the middle of the week. There's only like 312 companies reporting. But here's what happens Monday. There was only one of importance, and that is Palo Alto Network, big tech company there. So we'll see how that one goes. Other than that, not a lot going on. Let's look at the Forex factory for Monday. Most of the major announcements next week are weak. There aren't many major ones, right? Yep. It's retail. And when you have retail sales numbers that are slightly down, that's not really good for next week, right? When you know that retail sales numbers have dropped from 0.9 to 0.5, that would most likely it would lead me to believe that Walmart and Target and Ross Stores and TJ Maxx that are all reporting next week, that they may struggle. And that's not necessarily a good thing. So we already went to Monday. What was I doing? Oh, I was going Forex Factory. Hold on. I was going to bring up your economic calendar for Monday, but there really is nothing special on that Forex Factory, and my computer doesn't want to obligate. Anyway, all right. I will wrap it up there. So thank you guys so much. I'm starting to sweat. I got to get to the dog park and enjoy my Friday afternoon. Got pickleball later on today, so I hope you all had a great week. Hope you made some money. Hope your trades are green. Again, Big Ed, thanks for the McKenna 10. Delicious. It's going to seriously impact my trading game, that's for sure. That went too fast. It turns out for insight. 5 bourbons, no scotch, no beer. It was 1 bourbon. The beer and scotch come later, although I'm not a big scotch fan. So, again, if you guys have something you want me to discuss next week, let me know. You can email me at tradermerlin@gmail.com. Always happy to incorporate stuff into the show. And for those who send in questions, I appreciate it. Thank you guys for the support. Hit the like, subscribe button if you're new, and I will see you guys tomorrow. Take care, everybody. Or on Monday. Take care.